Welcome to this explainer. I am so incredibly thrilled to have you here today because we're looking at a series of moves that are absolutely reshaping the global financial landscape right in front of our eyes. Now, the week leading up to August 12, 2026 was without a doubt one of Bank of America's most consequential in recent history. I mean, we're talking about monumental, market-moving deals that bridge all the way from Washington to Mumbai, straight to London. It was this massive flurry of activity, and it perfectly encapsulates exactly how modern megabanks have to navigate an increasingly complex global economy.
Okay, let's just quickly run through our agenda. First, we'll dive into a blockbuster infrastructure bet, followed by their massive global expansion into India. Then we'll take a look at some recent internal shifts and leadership, check out how they're managing new emerging risks, and finally, we'll wrap up with the financial scorecard.
I actually want to start by mapping out these seemingly disconnected events on a timeline, because when you see it all laid out, it proves just how rapidly the bank executed this whole strategic transformation. Over just a couple of weeks, we see a cybersecurity acquisition on July 30th, a major executive departure on August 6th, a notable shift in lending parameters on August 11th, and it all culminates in two absolute mega announcements on August 12th. Right? When you look at it like this, you realize this isn't just a bunch of random press releases. It is a highly orchestrated pivot by one of the largest financial institutions on the planet.
Let's start with Section 1, the blockbuster infrastructure bet.
That number is not a typo. $250 billion. On August 12th, Bank of America launched what they are calling the Critical Infrastructure Finance Initiative. And you guys, the timing here is incredibly deliberate. They plan to deploy this capital over an 18-month window, running from January 1, 2026, straight through to July 4th, 2027. Basically, they timed a historic capital injection perfectly to honor America's 250th anniversary. It's a patriotic play, sure, but more importantly...
So the crucial question is, where exactly is $250 billion going? Well, they're funneling this into three main buckets. First up is digital infrastructure. So think data centers, computing hardware, semiconductors, and telecom networks. Second is energy and power. That's renewable generation, energy storage, upgrading transmission lines, and natural gas. And the third bucket is core infrastructure, transportation, water systems, and critical minerals. This capital is going to create tens of thousands of jobs across construction, manufacturing, and tech. And look, they are not the only ones seeing this opportunity. Morgan Stanley recently announced a $1.5 trillion plan, and JP Morgan launched something very similar last year. For anyone tracking market trends, this proves Wall Street is officially going all in on America's AI and energy buildout.
To really grasp the strategic vision behind this, just listen to this quote from Karen Fang, the bank's global head of infrastructure and sustainable finance. She says, "Meeting America's growing infrastructure needs requires mobilizing capital at scale across increasingly interconnected sectors." It's that specific phrase, increasingly interconnected sectors, that you need to pay attention to. You literally cannot build AI data centers without totally overhauling the energy grid to power them. And you can't build the hardware without the critical minerals. Bank of America is financing that entire interconnected ecosystem.
Moving on to Section 2, expanding globally into India.
On the exact same day, they announced this international investment. And the sheer scale of it is so aggressive. Bank of America announced an approximately $1.9 billion investment. That translates to about 182.68 billion rupees. And this buys them an initial 26.5% stake in GeoCredit. But here's the kicker. They secured warrants that actually allow them to increase that stake up to 49.9%, assuming regulatory approvals go through. So they are essentially buying almost half of a massive Indian lending operation.
Now, what's really interesting here is the stark contrast. You have Bank of America, this massive legacy institution, buying into GeoCredit, which is the non-bank lending arm of Geo Financial Services. And GeoCredit has only been operating for 2 years. 2 years! Yet in just 24 months, they have amassed over $3 billion in assets under management, commanding a roughly $3.8 billion valuation. Bank of America is jumping in right now to capture India's rapid financial growth, and they're joining a widespread rush set by other foreign players like Japan's MUFG and Dubai's Emirates NBD, who are also aggressively taking stakes in the Indian financial sector.
CEO Brian Moynihan summarized the whole rationale perfectly. He stated, by combining Geo Financial Services' scale, local expertise, and customer base with Bank of America's global reach, we can help expand access to financial services and support India's continued economic growth. So this isn't just an investment, right? It's a highly symbiotic partnership. Geo already has the local boots on the ground and an expansive customer base in one of the world's fastest-growing markets. And Bank of America, they bring the deep pockets and the global institutional framework.
Let's transition to Section 3, Internal Shifts and Leadership.
Okay, so on August 6th, literally just days before these two mega announcements, Mike Ju, the co-head of global investment banking, left for an external opportunity. Now, Ju had been with the bank for 20 years, which makes this a highly visible departure. What's particularly striking to me is that he was named co-head just 1 year ago during a previous leadership reshuffle. And he actually isn't the only one. His exit follows several other recent high-profile departures at the bank, including leaders in activism defense and tech investment banking.
But let's see how this builds into their broader talent strategy, because the bank is working hard to project total stability. Faz Ahmad and Kareem Asef are going to continue to lead the global investment banking business together, filling that gap pretty seamlessly. And more importantly, the bank is aggressively backfilling and investing in fresh talent. They've welcomed more than 40 new managing directors to their global corporate and investment banking division just this year alone. They are actively showing the market, hey, our bench is deep and we're more than capable of weathering standard executive turnover.
This brings us to Section 4, Managing New Emerging Risks.
Pivoting from their offensive bets, let's look at defense, starting with cybersecurity. On July 30th, the bank announced plans to acquire MDSec Consulting Ltd., which is an information security firm based over in the UK. This deal brings about 65 top-tier cybersecurity professionals in-house by Q4 of 2026. You know what makes this so significant? It's the bank's first acquisition of any kind in 5 years. 5 years. They're doing this as a direct response to the explosive surge in AI-driven cyber attacks and ransomware. This new team is going to plug right into Bank of America's existing cyber threat operations center in Chester, England, vastly bolstering their defensive walls.
But listen, their risk management isn't just about hackers. It's also about who they actually lend to. On August 11th, we found out that Bank of America is actively tightening its lending approach to AI data center projects. Despite that massive $250 billion pledge to infrastructure we talked about, they are getting picky. Why? Because of non-financial risks, things like community opposition and permitting disputes. For example, the bank is a structuring agent for a sprawling $16 billion data center campus up in Michigan that has faced really intense pushback. So they are drawing a line in the sand. They're effectively telling developers, look, we have the capital, but we are only going to finance your project if you actually have the local community on board.
And finally, Section 5, the financial scorecard.
So how is all this actually paying out for investors? Well, the financial performance brilliantly illustrates the success of this strategy. Bank of America recently reported their Q2 2026 earnings, and net income came in at a staggering $9.1 billion. That is an impressive 27% jump from the previous year. And this wasn't just a lucky quarter, guys. It was driven by record equities trading revenue and a very significant rebound in investment banking fees. Simply put, the engine of the bank is running red hot right now.
If we look at the core metrics, it's clear that market is highly receptive to this dual strategy. The stock recently hit a 52-week high of $64.81. Over the past year, it has gained roughly 38%. They've even increased their quarterly dividend to 32 cents per share. Looking ahead, Moynihan noted that commercial borrowing is picking up and near-term pipelines remain incredibly strong. Because of all this, analysts are maintaining a moderate buy consensus with an average price target of $68.77. That implies about a 7% upside from current levels. For anyone watching, these metrics signal a really strong vote of confidence from the broader market regarding these recent operational shifts.
When we pull back and look at everything we've unpacked in this explainer, we are basically seeing a masterclass in modern banking strategy. On one side of the scale, you have this massive offensive expansion, a historic $250 billion bet on the physical and digital future of America, paired with a nearly $2 billion aggressive leap into India's booming financial sector. But then, on the other side, you have defensive risk management, buying up elite cybersecurity firms to protect the fortress, and showing immense discipline by walking away from incredibly lucrative AI data center loans if the community footprint just isn't right. It's this perfectly calculated balancing act of blockbuster growth and meticulous caution.
Brian Moynihan and his team are positioning Bank of America not just as a traditional bank, but as a global leader in the interconnected digital and physical economy of the future. They are absolutely not sitting still. But the ultimate question remains for you to answer. Considering this rapid expansion into India, the monumental infrastructure bets at home, and their tightening grip on risk, do these moves justify the current valuation? Is Bank of America a buy at these levels? Take a look at the data we've covered, weigh the risks against the rewards, and let us know what you think. Thanks so much for joining me on this deep dive, and keep questioning the headlines.